All right, here's the big corporate story of the day. The Indian IT sector is bracing for some stiff headwinds in FY18, and these headwinds may persist even beyond this year. The Infosys management, for one, has hinted at more pressure in the legacy business over the next 3 to 5 years. That's because disruption led by automation and digital contracts is forcing clients to re-evaluate new contracts and renewals. Here's the report.
Over the last 5 years, Indian IT companies, especially those involved in IT services, have been working on coping with disruption from digital ecosystems and automation. But gaining ground has been tough, given pressures from demand and rising costs. And the signs that IT companies were getting a handle on the challenge are not as concrete.
IT companies typically classify their businesses into two areas. One is the run side of the business, which refers to the legacy traditional contracts, and the second is the digital side, which means the automation and newer technology-led contracts. With the emphasis increasing on the digital side by contracts, the run side of the business is coming under pressure. Infosys, for instance, which sees 70% of their business coming in from run side, is seeing pressure as a result of this.
Infosys says that while it is not facing overall pricing pressure in its legacy business, it will have to depend on greater business from digital contracts to make up the difference.
Let me clarify, we are not seeing any pricing pressure as such. What we are seeing is there is tremendous amount of cost takeout that is happening in run the side of the business. Whenever any deal comes for renewal, particularly on maintenance, infrastructure management, testing and so on. So there's a clear expectation from the client that over a period of 3 to 5 years to take 30 to 40% cost out. It's something not new, it's something that we have seen in the last couple of years.
Experts say the real problem for Indian IT is that most players have been a little late to the digital and automation party, and that's causing some pain. They add that IT companies must adapt faster and keep up better with changing technology and processes if they are to remain competitive.
Now we have not just automation disintermediating the Indian IT model at the low end, but we have things like AI and smart machines disintermediating at the high end. So you really need to retool your business models at both ends. And companies that have been nimble enough or have been working at this long enough, seeing the writing on the wall, will be the ones that continue to do fairly well. Those that don't will struggle.
Infosys, meanwhile, says it expects the softness to continue in retail and some portions of its consulting business. However, the banking and financial services vertical is expected to see a recovery by the end of the year. So, as things stand, Infosys is not changing its FY18 revenue growth guidance from the 6.5 to 8.5% it gave out earlier this year. In Mumbai, Kritika Saxena.